Good morning, everybody. This is Dennis Swobel, or good afternoon, wherever you may be. It's morning over here in Hawaii. I got a couple of guys online from the islands, and so hey, welcome to Making Money Trading Stocks and ETFs with the Active Trend Trading System. Let's see who's going to join us. I don't know if Michael's enjoying the last little bit of fall prior to the winter happening over in Austria. And so anyway, let's get going. I want to remind everybody that all the materials we're presenting are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Mike Traeger is in the process of moving, and so that's where he's at today. He wants to, once he gets moved and relocated, he's going to be joining us more often for this interlude. Here's a little bit about who I am, what I'm doing. So what is the objective of this particular webinar? Well, one of the things is just basically timely actionable intel review at the end of every week, basically covering what we covered on Monday. Now, this coming Monday, I'm going to be flying. I'm going to be flying back to take care of some business back for my mom. She had a stroke and has been in a rehab hospital, and so we're getting her out. And so I will be taking care of some of her business, and so I'll be flying, actually leaving the islands on a red eye going to Dallas. Somewhere in there, I will squeeze in I don't know if it'll be a webinar or just a recording of Monday's action, just to get so everybody can be up to date and see if we do have anything setting up. So we'll do a market review, stocks and ETFs setting up, and the outcomes of the ones we have traded. And then, anything else of interest, including the schedule of upcoming events and this type of thing. So let's see what is going on. So we're very pleased. Hey, I'm happy with the Active Trend Trading System. We've done about 37% for the year. What I'm going to be focusing on is bringing both Strategy 1, Strategy 2, more in line with how Strategy 3 is doing. I made an announcement last week, and we're proceeding, moving forward with this, is that Strategy 2, we're going to be turning that into a weekly/monthly income option trading platform. And so if, weekly and monthly income is something that you are interested in, what we'd be targeting somewhere between $500 to $1,000 per week is our income target. And so given that we typically hit about a 65 to 70% win-loss ratio, I'll let you figure out how much we need to make on a weekly basis to achieve that going forward. So let's take a real quick look. As you can see, each of the index up year to date, way over its highs from 2016. The big ticker today was, of course, the NASDAQ and the NASDAQ Composite, and that was because of primarily two big earnings reports. The one came out on Amazon, the other one came out on Google. Let's take a look at, and let's jump over to the charts real quick and take a look at, okay, we'll come back to the S&P, but I want to basically jump over here to the NASDAQ first, and as you can see, NASDAQ just blew, big, gap up. Now, is this a breakaway gap or is this an exhaustion gap? We shall see. With the power that was behind Amazon and Google, I'm categorizing probably more as a breakaway gap. And so this may set us up to run into the end of the year. Good things are happening. 3% gain on GDP, or a little bit over that. Janet Yellen may be out when it comes to the Fed. And basically, the economy is really starting to pick up and fire on all cylinders. Well, what's driving the NASDAQ and the NASDAQ Composite today are these two little stocks right here. One is Amazon. Anytime you get earnings and you blow past resistance, and so this all-time new high for Amazon doesn't look like it's going to run back down. Very strong on Amazon. If this candle remains this strong, then that's a very good, into the close, very good indication that this has some potential additional legs. However, take a look at Google. Google is also making a brand new high, but profit taking is taking place in Google to push the price back down. Some of the other ones that are just, and we'll take a little quick look at, Facebook. I haven't really looked at Facebook today, but again, Facebook breaking out to new highs. Facebook seems to be the tame one of the fangs, and Netflix. Oh, NFL. Netflix also didn't quite break out to a new high today, but kind of interesting as if it is, it has come down and bounced off the 191. Now it's back up into a resistance zone, and as you can see, sellers did come back in this zone to push prices back down for the day. I mean, it's up for the day, but it's a clear indication of where the sellers came in. So it did push up to 200, which is great. But now it's kind of, is it wavering? And will the gain on Amazon and Google be kind of like the gain that we saw earlier this week in F5 after F5? Now, I'm not comparing F5 to the other, but as you can see, F5 did break out, broke to above this resistance area at the 124 area, but then it failed towards the end of the day. And we're getting a nice push up today, but then a big fail as far as a daily candle goes, and an interesting, big candle on a weekly chart. So just things to consider. Let's take a look at SPX real quick. SPX on a daily chart, TSI tick up above the 0 line. Those can work. As you can see, it worked here, bouncing off the 20-day moving average. Was not a really great move up, and as you can see, very hard to catch unless you were just, doing a high-risk position at the 20-day moving average, because you had no tick-ups. You had nothing saying, okay, hey, it's time to get in. On a weekly chart, take a look at this. What do we have? Well, we have the TSI up in the upper reversal zones, tends to not get much higher than this before it does some kind of pullback. And what is that? That is basically either you can consider either that a dragonfly doji or a hanging man doji, which tends to be a reversal signal. We have an outside week, also at the end of an uptrend, can be considered a bearish sign, but at this time on a daily chart, not getting any, after we've had this rebound, not getting any type of bearish signals whatsoever. Let's take a real quick look at NASDAQ. As we saw earlier, breaking away out of the zone. And the question that I have a lot of times is, and I know the IBD traders, they take a look at this a lot, is it breaking out of its upper zone for the channel that it's been moving in? And the answer to that question is, yes, it is. And so oftentimes when you get a breakout above the channel, that's an indication that you're going to get a pullback back into the channel. Again, we're breaking above the Keltner channel, and oftentimes, that also results where it's extended. It's extended about above the 8, above the 20, and definitely above the 50. So, we'll take a look at, are we in fact, going to go a lot higher? We shall see. What do we have coming up with earnings next week? We've got Tesla coming up, and then towards the mid part of November, we have NVDA coming up, which NVDA could be an exciting earnings time. So let's take a look at the Russell. Is the Russell playing along with the excuse me, the NASDAQ? To some extent. We'll watch the Russell, because we could be getting a TSI tick up close to the 0 line. And so if I were to be playing the Russell, which I thought we got a signal on it last week where we got this breakout, but I'll be watching this again now. Just watch the 8-day moving average. If it pulls back into the 8 and then rebounds, that somewhere between the 8 and the 20 would be the area where we would want to get into a position on probably TNA. TNA, as you can see, it's right now. And why wouldn't we want to buy it right now? Well, one of the reasons is it's right up against this resistance area made by that line, and the resistance that it bumped its head on previously, and then reversed down off of it. So, okay, good there. And the other thing we have is keep an eye on the market forecast, which has basically pushed up into the upper reversal zone on one of the indicators. And again, it looks like I said, it looks like from a weekly standpoint, those are multiple spinning tops finishing with two hanging men in a row, outside week, which could say, hey, it's more bearish than it is bullish. So at this time, like I said, I would like to see a pullback into the moving averages, like the 820 combo down in here. Haven't seen that, or haven't had that in a while. We got a little bit of it on this week here on the daily chart, but not on the weekly chart. So the indications are that, hey, we're still going up. A couple of stocks that we are looking at for the week, for next week, a couple that are on the radar. Momo. Again, this is a bottom fisher, and you can just basically draw when will this become interesting to us? Well, one is we'll draw a trend line across there. We have earnings coming up on the 7th before the market opens. The 7th equates to 4, 5, 6, 7 Tuesday in a week and a half. And that's before market opens. Will we get a bounce back up to the upside? We've got positive divergence. That's good on a daily basis. Things look like they want to roll around. We haven't had a reversal candle yet, but is it worth trying to take a potential move on Momo, maybe back up to the trend line? How much of a move would that be? Well, it's just about somewhere about 10%. So if it did that, I would say, if it did this on this, it would be about, 7 to 9%. So take a look at that as a potential. But I'd look to the intraday chart to do the timing on that. The other one that looks kind of interesting, Kiwi. Kiwi is also continuing to build Kiwi I actually like better long term. But it's going to depend on what it's going to do in this consolidation area. If this is the bottom of a cup, we'd expect it to come blasting out of the $18 level and move on up. So far, hasn't done that. So if you're doing a preemptive strike, we probably want to wait until we get a price down here around 16 or 16.50 or so to enter a position with a clear stop loss if it drops below the 1579 level. So there you go. Get a little bit of both stocks that we're looking at and the indexes themselves. So okay, so what I like between I would like, again, I'd like to see a pullback, a better pullback prior to the end of the move for the end of the year move. But is the pullback over? Hey, the pullback for this year, it may be, it may not, take place. I still like IWM or QQQs better than I like the SPY. We are, remember, please share the information with your friends. The active trend traders, For the people who join us on Monday and Friday, which are free webinars, we're only offering, basically one bonus trade per month, approximately, somewhere between 10 and 12 bonus trades that will basically walk everybody through how we're doing the trade and all that type of thing. The last one we got into was on 1013. We're still in this trade. It's up about 2%. And so we're in on the 1013, and we'll see if Dave and Buster can, go breaking up, go into a pre-earnings run. Netflix, Tesla, NVDA are our primary stocks that we're, basically trading all three of the strategies on. YY, Kiwi, F5 we just did the pre-earnings run on. We'll see if it sets itself up for a position. JCOM looks kind of interesting. The Catfish Special, which basically are bottoming stocks that look like they could pop. Play is still in that category where it's consolidating, and if the consolidation holds and it rips back higher, that would definitely give us another opportunity with Play. Ellie, Momo, Sienna are all the Catfish Specials. And then as I brought to everybody's attention, strategy 2, we're doing some refinements on that, going to basically be generating more income trades utilizing a very small portion of our capital to trade, and primarily option trades. And the alerts will be going out on the options and what options we're taking. And this coming Friday night and this coming Wednesday training session, we'll be working specifically on the conditional orders on making those kind of trades happen. So lastly, November 4th, which is Saturday a week from now, my good friend Lee Tanner, who is the meetup facilitator for the Petaluma IBD group, and probably one of the best traders that I know. He's going to be talking about IBD stock dissection. He's going to basically go into what makes a good IBD stock, and then how to buy it, when to buy it. I love the attitude that Lee has with regarding staying bullish for the long term. He basically says we've only had 3 major corrections since the market, crash of 1929. So he says most of the time the market's going to continue going up, and so he uses his margin very effectively and efficiently, and typically turns a high, double, a good 2-place return every year, and sometimes even goes into 3 decimal points on it, or 3-fold increases on his portfolio. Sorry about that. So, okay, here is our bonus trade so far. We're working on Play, and again, by the end of the year, we're going to continue doing this, and we'll stay with Play until we get a solid, either hit our profit targets, which at this time we have one target profit up about $50.15. That'll take 5, and we'll take half of this position off, and then we'll continue to add to this again, so up to 12 stocks per year, but somewhere between 10 and 12 stocks. Here's where we're sitting as of the year so far. Haven't had a lot of action for the month of October. And what we see as a reflection here, not necessarily have these been huge losses, but I make an adjustment to show both open and closed trades in this, and so it winds up that we take a little bit away from every month to get everything to balance out. And but again, 37% for the year. I'm targeting, I believe we will hit about 50% for the year, which is good. Talk real quick about the seasonality on the NASDAQ. As we are at the end of October time frame, so my question is, are we actually in a play area where we're was this the setup that we're seeing today? Okay, we get a breakout, and so we'll draw a trend line in, Excuse me, I had a sneeze. We'll put a trend line and see what kind of, where we would want to pick up NASDAQ if it continues to pile higher into the end of the year. We'll see. One of the other areas that we want to keep an eye on also is the Russell. The Russell tends to do some bottoming in the October timeframe, and towards the end of October, it launches itself into the November timeframe, and then you get some positioning to move higher into the end of the year. Both of those entities tend to get a spark going into the end of the year. We'll see if that continues to happen. We'll see where and when that is for premium members on getting our seasonal trades into place on the Russell and the NASDAQ. So active trend trader, what we do is basically, our intention is to help people clarify, simplify, so they can multiply their accounts. So we rely on the 5 pillars of active trend trading, which is basically, we show what to trade, and we do that through our alert system. And we're primarily looking at top quality growth stocks and top-notch ETFs. Excuse me. Okay, the last is when to enter, when to exit, what strategy we're going to use, and then what we expect to happen. Again, what I'm aiming at over the through the end of the year is to get all 3 of the pillars firing on all cylinders. Apply and refine strategy 2 to where it will be. And if you're interested in strategy 2 or any of those, please drop me an email and we'll show you how to get involved with the active trend trading premium service. One of the things we did introduce here lately is the go no-go table that is provided to the premium members. And what it does is basically shows what entities of what we're following have setups, what the setup is, and also just comments about what it would take for each one of these other areas other entities to have a setup. So this past week we were focusing on IWM, Sienna, and Play. This week F5 will probably be falling off the list. CRUS, there may be time to make a CRUS trade prior to earnings, and I think it has earnings on the 2nd or 3rd of November, but I'd be out of it prior to the end of earnings. So, okay, folks, that's it for today. Thanks for joining. Again, 2017 has been working out as a season of really explosive growth. Keep growing the egg, trade wisely. You can follow active trend trading at either on Facebook, Twitter, and so for the others, we'll see you, the premium members, at the final hour to talk about what's going on with the entities that we're going to be tracking and hopefully trading. So, okay, Neil, yeah, if you'll hang on. So until Monday, aloha, trade wisely, trade profitably. Thanks a lot, guys.